What's up, everybody? This is Jimmy with Trade Decoded. It is 4:02 in the afternoon. It is July 16th, 2024. The day started out pretty great. We had some good movement earlier in the day, and then we lost movement in volume after lunchtime. So you won't see any trade suggestions or arrows or anything like that on my chart after, I think, 11:45-ish. And that's because we happened to catch one of the best moves of the day right before 12 o'clock. And I went to lunch. And when I got back from lunch, volume was gone. Chart was in consolidation, and there was just nothing to do. By the time it started to move, it was moving at such a slow pace with low volume and thetas ramping up. It's time of day that I choose not to trade ever. So, I don't offer trade suggestions at that point because, well, if it's not going to work for me in the way that I trade, I'm certainly not going to try and convince you that it works for you because you're going to do it. So we might start shortening these videos up simply because, well, I stopped trading after 12 o'clock. I don't touch the chart. In fact, I'm usually done trading most of the time by 10:30. But there's still things to talk about and examples of trades that we did talk about before they happen that lead up to lunchtime anyway. So we'll always talk about those. But without further ado, let's go ahead and launch today's chart and see what we had going on. Well, this morning, everything was pretty green in pre-market. We kind of anticipated ADD was going to open well above 1,000. It did exactly that. Now, for those of you who don't know what ADD is, it is basically a barometer for the overall stock market, right? I use it to understand what small caps are most likely doing, because if I'm watching the Qs go down and ADD is going up, that typically means that small caps are going up even though the large caps are coming down, okay? So I don't use ADD to get into any of my trades. ADD is used as a tool after I get into a trade, or if I'm using it as support for a reason to get into a trade that I'm already interested in taking. And I can explain that a little bit later in some of these examples. But with that said, when ADD is at 1,500 or higher, it's just telling you that the majority of the stock market, and I mean everything, is at a higher price than what they closed at the day before. So when you close, going into the close with a big red, downtrend, and then this morning you open up above those closing prices, well, ADD is going to open up way in the positive. Now, that's important to know because it's telling you that the market bought up after hours and in pre-market. And what you need to wait for if you're looking for puts is a rotation of ADD to the downside. Okay? If everything is pinned up here at the top, then you don't want to be chancing reversals or, expect big pullbacks if ADD isn't giving you the sentiment that the market is taking profits or starting to sell off. Okay, that's all we use it for. Never use ADD. I don't want to say never. 99% of the time, you don't want to use ADD alone as your gauge to get into a trade. Okay, now I'll also tell you this. Qs have the Magnificent Seven. They also have the heaviest weighted stocks in the entire stock market. So you will find very often where ADD is going in one direction and the Qs are going in another direction. They are counterbalancing themselves. Okay? This happens a lot of time when you have a rotation coming out of tech stocks and into small caps. And likewise, out of small caps into tech stocks. So you will see this happen a lot. But just remember that if one of them is trading sideways and the other one is moving in one direction or the other, SPY is going to follow the one that is not trading sideways. Meaning if ADD is moving sideways, not up or down, think of it as it neutralizing itself. It's taking itself out of the fight over controlling SPY. right? So that means if the Qs move up, SPY is going to move up. SPY will almost mirror the Qs perfectly if ADD is no longer a factor, right? When ADD and the Qs are moving in the same direction, you do not want to be playing in the opposite direction. Trust me when I tell you, okay? It doesn't happen all the time, but it happens. And when it does, that is the A+ setup, and you do not want to you don't want to counter trend trade that. You don't have to get into a trade with it, but don't trade against it. Mark my words. All right. With that said, let's get into today's chart. So we had a pretty tight-ish pre-market. We were very green in pre-market, so I wasn't interested in puts right off the bat. We were trending up leading into the open. Qs were in a relatively tight range leading into the open as well. So all things considered, we were prepared for calls. I'll tell you this, our call line, as we do every single day, was a candle close above 562.88. Okay. Now, for those of you who watch my videos or in my community, you know where these lines come from. Okay. But to make it short, it's simple support and resistance levels that we have created in pre-market the day of. Okay. I don't want to buy calls off this futures line when I know we have a pre-market resistance 15 cents or 10 cents above it. What do I want to see? Well, I want to see us close above any pre-market line that would lead me to believe we should move up to the next resistance because of that. That's all I'm looking for. The only thing that changes about the call put scenario is whether we get in because of a breach or whether we get in because of a candle close above or below these lines. Okay? The way to answer that is if we have no price action on the day above our call line, it's best to wait for a candle close as confirmation for entry. Remember, resistance is there because enough people shorted the market to stop SPY, in this case, from continuing up at some point in the past. Well, the minute those shorts get breached and we close above that line, if you're short the market, you're red on that trade at that moment. Well, what do you do when you're red on a trade? You stop out. Stopping out when you're short the market means you're buying to close. What happens when when buying occurs in the market? It pushes price up. Okay? That is why there are people out there who play breakouts. That is why oftentimes when we close above or below a line of support or resistance, the move continues to move in the same direction because you got a bunch of people that were once short here having to close out of it, pushing the price up to where the next line of sellers or shorts would exist. Okay? That's how this works. Nobody can see the future. Nobody knows what the result of any trade is going to be, but we do know how the market works and what probabilities of certain things taking place are. Okay, this is all a game of probabilities, and it only becomes more and more difficult when emotion gets involved with it. And unfortunately, trading is an emotional thing. It's hard. I would say it's impossible to trade with no emotion. But what is possible is to have those emotions, but keep them away from dictating what your trade plan is. Meaning you get in, you're up in your trade, you're excited. You might say, oh, I'm super excited. Let me just hurry up and take profits. No, you can shelf that excitement and wait for your profit target. Not always is it going to result in more profits. Sometimes getting out at your excited level may have been the best time to take your profits. But the fact of the matter is, as you do this longer, you will be able to ignore the feelings that will exist and keep them away from making your trade decisions for you. Most new traders struggle with the emotional side of trading, not the understanding of the technicals of the market. Okay? So anybody who's out there telling you you need to figure out how to trade without emotions It doesn't happen. It doesn't happen. There might be a select few people out there who can truthfully and honestly trade with no emotion. I've been doing this a long time and I can't feel it. I can't see how it's possible. Everybody I've asked ever in the 3 years plus that I've been doing this has never told me they've managed to work out so that they have no emotions in their trades. Okay. You may be able to, like I said, shelve those emotions and keep them away from making your trade decisions for you, but you're still excited when you make money and it still hurts to lose money, period. Yes, you learn to accept that if you do the right things, you're rewarded with profits. If you do stupid things, you're rewarded with losses. So the pain will always exist because nobody likes losing. Nobody likes losing in anything, right? We accept it because it's part of the job, but nobody likes it, right? So with that said, we crossed the call line with the candle close on our very, very first candle. Now, I myself did not take this trade. I made that clear while this candle was printing. Guys, I'm not going to buy calls here. And the reason is Qs are stuck at a very similar line of resistance that I would rather wait for Qs to close above that to tell me that the sellers there are not a problem. So I myself did not enter this trade. Okay. It still worked out beautifully. Your stop loss was a candle closed below the blue line. Yes, we wicked below it once. We got in. Qs, the reason this circle is here is because Qs were hitting their first target resistance. Always worth considering taking profits when Qs run into a resistance of their own. I personally did not get into the trade because of how close we were to the Qs resistance. But what I do and what members in my community do oftentimes differ. Okay. However, I wished I would have taken it because it would have been a nice, clean trade. Instead, I bought the pullback. When SPY made it cleanly up to that line, we pulled back to support. And let me also point out, Qs were having a hell of a time getting below this pre-market midline. So I said before this even happened, puts do not exist to me until the Qs can at least get through this pre-market midline or through the pre-market low line. Okay? The market was too happy this morning to play puts aggressively. Well, got in at a pullback and you got out because we hit the known resistance. Okay? Now that there was a 27% return, 27.4. If you held on, waiting for the Qs to get higher, right? But we had nothing to go by over here. It just stopped in the middle of somewhere. So if we close above this level, we're hoping that the Qs make it up to 498.74. When this wick started to develop on the top of the Qs candle, I was already out of this trade. Actually, I think I got out on the pullback on this red candle. But either way, as this started to happen here, told you guys, hey, starting to show signs of weakness indicated by this wick on the top of this candle. And at the same time, if I'm not mistaken, ADD was starting to show a wick on the top of its candle as well. Let's see, what time was that? Because we were looking at more than just the Qs. 9:39. Yes, right here. So Qs or ADD was getting close to what they had popped up to on open. If you could see, it's the first candle there that was starting to develop a wick. We watched this. We said, guys, ADD is showing it's at a resistance and it's showing a little bit of weakness as per there being a wick on the top of this candle. Doesn't mean it's going to reverse. Doesn't mean you have to get out. Just be prepared so that you can stop yourself out if we continue to fall back through this line of support. Okay? That was it. So if you got in and got out here, still a good return of 25%. Got in here, got out here, 25+%. You may have squeezed a little bit more out of it, or you stopped out here because we were sensing weakness in the market. And at that time, the Jim indicator was starting to flash here, meaning we were sensing weakness in the things that we watch to keep us in that trade. Okay? It didn't print because by the time this candle closed, one of the things that makes these things show up was no longer true. Now, somebody asked in my comments yesterday, where did I get that indicator and what is it? I made this indicator and I give it to my members for free. What is it? It's basically an easy way to see when everything that we want to see for an A+ setup is true. Now, for me, an A+ setup is if SPY on the 1 minute, SPY on the 5 minute, NVIDIA on the 1 minute, Qs on the 1 minute, and ADD on the 1 minute are all moving in the same direction or the same color candle at the same time. Up or down. If it's up, we get green. If it's down, we get red. Now, is this a buy-sell indicator? No, it is not. Does it work when used properly as a buy-sell? Yes. Just because a red arrow shows up during an uptrend doesn't mean we're going to reverse. So what do we use this tool for if we're in calls? Well, if we get no red arrows printing while we're pushing up, we know that the majority of the market, at least everything we care about, is not in the same direction at the same time going against us. Okay, so you may choose to say, well, ADD is struggling, but Qs are still going up. Let me stay in it. Once we saw that red arrow show up, it flashed up here for about 3 seconds. That's when I told everybody, if you're still in your calls, you may want to consider taking your profits because that red arrow popping up is an indication that maybe the strength of the move that got us up here is becoming at risk of not being so strong anymore. And lo and behold, took two extra minutes, but it fell right back down to support. Okay, so most people were out by this point. Likewise, we move back down to support. Again, Qs and everything else was still holding above this line at this point. And we get to a point where Qs finally breached that pre-market midline. And while we were up here, people are asking me, Jimmy, would you do puts now? Jimmy, would you do puts now? No, guys, I would wait for that pre-market midline to get broken if you're going to play them, okay? Now that line got broke on the Qs at 944. SPY was right above a very solid support. Wasn't worth taking that risk. We move up. At this point, and again, way earlier in the day, I told everybody I would be switching from calls or looking for calls into puts only if the Qs broke through their pre-market low line. This blue line down here. Guys, look at the strength of this line all through pre-market. Super strong. If we close below that, I'm going to assume we're going to move down to the next line. If that happens, I'm taking puts. Well, guess when that happened? On this candle here. Now you're saying, Jimmy, you didn't buy puts when the Qs broke their pre-market midline because the SPY was on support. How come you bought them here? Well, it's important to recognize that the Qs broke that line at 948. Sorry. That was this guy here. Okay. So we got in because, not all the way up here, but when the Qs crossed that line, we got in. We were waiting for the Qs to make it down to their next support. They crossed here. They made it down to their next support, tried to go farther. Now they have some support right here. So if you were trying to get out line to line, again, these are quick scalps, guys. But that was my smallest winning trade today, by the way. That was only an 18% win. So not a huge home run, but quick money. Okay. We hit that support, bounced right back up. And then the Qs at 957, I think it was what it was. We got through. Yes, this was the next one. Once the Qs got through their pre-market low line, that was the entry for the second put suggestion. We came back, we retested the trend line. I said to everybody, if we get through 496.35, I'd be looking to go short again because Q's got some space to open their legs. Now, I didn't expect to drop like this, but it was looking pretty good. And I'm going to show you the Q's chart. It's hard to argue whether you should be trading calls on SPY or not. Now, at this point, ADD was still very green. I mean, look at what ADD was doing, right? Up all the way up till 10 o'clock. Qs was going in the opposite direction. We talked about this before this video started, guys. I don't use ADD as a reason to take my positions. Okay? I use it for a reason to stay in my positions if I'm in one. Now, when we got below 496.35, that was a go for me. Third and final trade for me. That happened right here. Okay? Now, on that particular trade, we are looking for the Qs to make it down to their next support. Now, that happened pretty quickly at 9:59. Okay? That brings you right to this support line once again on the SPY. Normally, we are out of our trades by 10 o'clock. Normally, we have somebody in our community letting us know with a 10 o'clock timer 5 minutes beforehand. So because of that, getting into a trade this close to 10 o'clock is always risky. Now, many of us, I would say almost all of us, were oblivious to the time at this point because a lot of us took this trade simply because of the Qs. 10 o'clock came, then somebody said 10 o'clock candle, and was like, oh crap. We don't like to hold through the 10 o'clock candle. Now, fortunately, we stayed below this resistance and Qs continued to push down. It was after 10 o'clock that ADD started to push down as well, which is what kept us into that trade longer. We ended up riding those puts from here all the way down to the pink line, which was not nearly as aggressive as a drop on SPY as it was on the Qs, but it was good enough to gain 45% on that trade here to here. That's why that circle's there. After that, we got to our pre-market low line on SPY, never closing below that to enter into puts as the put line. That was the put line at 562.14. We bottomed out there, and then we started to put in higher lows. Okay, now I'm done now, but this is where we start talking about higher lows are bad for what? Because I got people who see this, who don't believe the market should be up and blah, 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 that they're looking for every reason to continue to play puts. So guys, higher lows, wait for the higher lows to be done before you consider buying puts, please. Okay, higher lows are bad for puts. In fact, this is the exact scenario of the wedge or the bottle caps situation we talk about all the time. This wedge has a tendency to break up, not down. If you were putting in higher lows, that is symbolizing the buyers getting stronger, not weaker. Again, think of it as a bottle of water that you're filling up from the bottom. Where is all the pressure going to build in that scenario? Is you're pushing water up, 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 right here. The pressure is building here. So in a failure event of you in that scenario, what is going to fail? The top off, and all the pressure of the water that's been coming in from the bottom is going to shoot up. Okay? Now, this is not the case 100% of the time, but way more often than not, it is. Now, why does this matter? It matters a lot to aggressive traders because if you're looking to take advantage of that potential move before it's halfway over, you might say, hey, this statistically breaks high. We're pulling back to a line of support and or our trend line. Let's use this as a reason to get in early. Hope that the odds play out in our favor and we can shoot up to the day's resistance. That's it. This was a beautiful trade. Now, the reason this circle's here is because we wanted to hold on to that trade. I say we as a group. I was not in this trade. We wanted to hold it as long as we can, hoping that it was going to continue to go up. Now, ultimately, it ended up going up, but not to the peril where I would have held, hoping for it to hold support here and then shoot up. No. Guys, we crossed our line, which would have been our profit target. We closed beyond it. We'd love to see it continue up through this known resistance area right here. But if you don't feel comfortable doing that because you made enough money so far, take yourself out of the trade. Nothing wrong with that. But if you want to hold longer, hoping for more, I would say if we close below this line of support, you want to take yourself out of it. Now, we barely closed below it here. We did close below it here. We've stayed below it here, and now you're starting to wonder, well, we are still trending up because we haven't breached the trend line. Maybe you held it a little longer. That's totally up to you. I don't feel good holding my trades for a long period of time, especially if the trade did exactly what I hoped it was going to do and it got me exactly where I wanted it to get me. You're tempting fate at that point. If your trade plan works out 100% the way you hoped it would, get into and out of that trade exactly how you planned it. Because the minute you deviate from that plan, you're opening yourself up to be vulnerable to your emotions. And when that happens, bad things happen. Okay? So, if you are going to take the risk of trading outside of your original plan, please protect yourself from yourself with a stop loss. Period. Okay? We pull back, we stop out if you continued to hold. Ends up moving right back up, putting in a new high of day, pulls back down, then we cross below the trend line. At this point, calls come immediately off the table for the time being. Okay? That's all. Doesn't mean buy puts here. Just means calls come off the table until there's reason to think that they're the right play again. Okay? Now, we break that. Some people buy puts when that happens. We stayed below resistance and we made it right back down to support. Okay, well, it is a counter trend trade because, well, at this time, we're still trending up. Everything in the market at the time was very, very green. No reason to hold counter trend trades forever, hoping that it just keeps falling through the sky. Okay, take it for what it gives you. Then we start to move up. Now, the problem is you don't want to buy here because, well, we had just broken an uptrend, but we are also coming up to a line of resistance. Okay. So you wait here. Well, if we get above this, Jimmy, we closed above that line of resistance. Should we buy calls now? Sure, if you want to ignore that this resistance right here exists. Now, I don't know about you, but that's awfully close to the minimum 20 cent. It's a little bit above. So yes, realistically, I mean, you would be going from 39 to 58. That's right at the cusp of that 20 cent potential. Now, it did get to and through that 20 cent line of resistance here. Not worth the risk, in my opinion. However, if we can get above 563.78 and the Qs are not stuck at resistance, so at 1108, Qs were, I think, also breaking above resistance. Yeah, Qs had just gotten above their resistance here, so we were waiting for SPY to do the same thing, right? We said on the Qs, if the Qs can get above 495.69, that is not the orange line, it's just above it where all of these candles failed to move higher, I would expect Qs to run up to 496.35 as a result. Well, we waited for SPY to breach the line. Qs had already done their part of the job. So as soon as SPY breached it, you could have got in. You could have got in here because SPY breached it as well. And then up we went. Now the exit on this trade was when the Qs were going to hit this line here. So at 1108, you would have been looking to get out of this trade, which was the same as the entry candle. You don't have to get out there. And many people wait until we hit the SPY lines. Some just hold longer. That's totally up to you. Again, I was not in this trade. No skin off my back. You do you. Just protect yourself from yourself in the event that greed overshadows your thought process because it becomes dirty. Now, this is the last trade suggestion of the day, and this one's important. And I'm sorry for this video being 30 minutes long, but it is what it is, guys. I have a lot of information to share with you. I just need you to open up your ears, listen to me, and start trying to apply some of the things I tell you in these videos. You will learn to see that this stuff works, okay? We are pulling back during a uptrending day. So naturally, we are typically looking for calls during pullbacks. Now, I didn't suggest this trade, but I do know for a fact that people in our community bought this pullback here. We go to 1116 on Qs, right? They were also pulling back to support. So there was absolutely nothing wrong with considering an entry here for calls. However, as we started to round off and put in a lower high, I told everybody at this moment, if you are in calls off that support, please, please, please be prepared for this trade to not work for you. Lower highs are bad for calls. Not only the minute we put in this lower high, if you're already in calls, this is giving you the opportunity to get out with a small profit or break even. If anything, you should be looking left at this point saying, okay, that's a lower high. This usually means the trade is that the support I bought on is more likely to fail, not hold. If it does that, where am I going to stop myself out at? Okay, that number that I gave to everybody was 563.61. If you insist on holding through that lower high, if you're in calls, please make this level your stopping point to prevent catastrophe. Okay? Because if we get through that line, I'm fully expecting the Qs to run down to their next support, or SPY to run down to its next support, which is down here at this yellow line. And again, at the same time, Qs, if I'm not mistaken, had already started putting in lower highs. Okay. Also, it broke support. Both of them came right back to that resistance that we had just created. And we told everybody at that point, if you're still holding on to your puts, or your calls rather, consider this a second opportunity to get out unscathed. I know it's very difficult to get out of a trade with minimal profit or with a little loss, but trust me when I tell you, the odds of that call trade working significantly decreased when we put in that lower high. The odds, I can't see the future, but we were talking about this turning into a losing trade before it became a losing trade. Simply because Qs had started rotating down, SPY put in a lower high. That is bad for calls. Don't believe me. Watch it for yourself. Okay? Now, we did not cross below that catastrophic line of support. Now, where do we come up with these lines? Guys, if you're not going to use your entry support as a reason to get out of your trade, which would have gotten you out here, fine. That becomes important to me only after a lower high is put in. Because when that happens and I'm in calls, I assume that the trade is going to go against me, and therefore, why wait for a further down stop loss point when I can spare myself a little bit less of a loss by getting out sooner? My strategy changes on my stopping point when I see something that tells me the calls I might have been in is not likely to work out anymore. It goes into a protect mode. I protect my money. I get out. If you didn't get out with some profit or break even, get out with a small loss. But Jimmy, look, it held that line, right? Just like it did here on this little guy. It doesn't seem like much, guys, but sellers tried to push us down here and buyers didn't allow it. They picked it up. So this is technically a level of support as well, which is where all of these candles right here stopped moving down. Just look left. But from this line of support that you bought on, 20 cents down, which is the max level that I would ever consider a stop loss, is right here, where sellers won on this candle, buyers came in and took over and pushed us up. If we get below that line, expect those buyers to turn into sellers and push the price down off of a lower high. Sellers are getting stronger, buyers are trying to be stronger, but in the minute they cannot, sellers win. Join the winning team. If you're in calls still, this was your second opportunity to get out with a small win, break even, or small loss before it became a big loss. Now, for my counter trend traders out there, or people who listen, the lower highs are bad for calls. That means we shouldn't be looking for calls. What should you be doing? If you're looking for puts, you better be waiting for a break of support. And when it happens, take it. Take it. Qs were already trending down. At 11.29, the Qs were also breaking their support, and they did successfully. continued to crash down. Now on the Qs, we were looking for this down here as support. We got very close to it, tried to get to it several times, couldn't move lower at the time. Take yourself out of the trade. You had support here, you had it on the Qs as well. This is when the Qs was trying to touch their support. Okay, that was a nice move. And preventative, could have been damage prevention for call holders. We spotted this before it became a losing trade. Okay, learn to see these things. Shortly after that, we started to trade sideways. I went on my lunch break right around 12:15. So I didn't get back till about 1:15. Obviously, I came back at a very time of consolidation. Nothing to trade here. Volume was in the trash, dismal. And then it just gets too late in the day. I mean, theta really ramps up. I don't play next day expirations and I won't hold overnight. SPX contracts for next day, even late in the day, are super expensive. So that's not attractive to me in any way. Plus, I'd already met my 3 trade rule for the day. But these moves up like this, we were in a channel. If they don't move as quickly as like this did, and you're moving like this, you're chopping up and chopping down, theta wins this fight. Okay. For me to get in on support here, that's a great trade. You hope it moves quick. You could have had a good win there, right? No doubt. But do you get into calls because we close above this when there's no volume? There's no way to gauge whether continuation of these moves is going to work out or not. Okay. We had a Fed speaker coming on at 2:45 that you had to be concerned with. It's just, for me, I don't offer trade suggestions this late in the day because it typically doesn't work out well for my style of trading. So I'm not going to try and convince you, hey, I won't do it, but maybe you should. That's not cool. All right. So you won't see arrows on my chart for trade suggestions later in the day for that reason, right? There's too much levels of support and resistance. There's too many things that work against you when you're day trading options, same day expirations. It's just not worth it to me. In fact, when I'm tired to retire 5.5 years from now, you think I'm going to be sitting in front of this chart all day long to try and make more money than I need? Of course not. I'm trying to get in at 9:30 and I'm trying to be done as soon as possible, having made enough money to continue to pay my bills, period. End of story. I'm not looking to day trade all day long. So I'm conditioning myself to not have to do that. I don't want to get comfortable leaving a 9-to-5 job just to come to another 9-to-5 job. It's not what you should be aiming to do. Okay? Now, while you're at your 9-to-5 job, it's very easy because it's entertaining to sit here and try and trade all day. Late day trading is very difficult. Okay? It can definitely be profitable if you get into a late day move that moves aggressively and quickly. Those things gain value fast. But if you happen to be in a move that goes from support to resistance, even a small pullback this late in the day will take away every bit of profit you made, only having pulled back a fraction of the way against you. It's dangerous. Okay? It's dangerous. So I choose to stay away from that, and I'm trying to train and teach other people to do the same. More trades doesn't mean more money. Late day trading becomes far more risky. Period. End of story. I don't think you can convince me otherwise. If you do it as your strategy, that's awesome. I hope it's successful for you. Contracts are far, far cheaper later in the day, but the spreads get bigger, slippage gets worse, and the moves become very unpredictable. Now, if you're going to play it as a gamble, have at it. Have fun. Just play a small position size and hope that they do well. But I typically do not recommend trades late in the day for that reason. And with that, we're going to wrap this up. I hope you got some useful information in this video. If you did, please like, share, and subscribe. If you'd like to join our Discord community, well, we'd love to have you. There's a link down below. And then we'll leave it at that. So I hope you all had a fantastic day today. Again, another 40-minute video. I'm sorry. But until tomorrow, I love you guys. See you.